Hi, welcome to this video today, which is all about how to become a Forex prop trader. Now, in terms of becoming a prop trader, it is a route that many retail Forex traders want to take. And the advantages, if you find the right proprietary trading firm, are really good. You can get basically a substantial amount of capital allocated to you to trade, more than you may have yourself. And then if you perform, then you can share in the performance with the prop trading firm. Now, in terms of this sort of route, a lot of traders I know have taken it, and there are many who actually earn a great second income. There's a few that actually make a living from being prop traders. Now, in terms of if you want to become a prop trader and you're serious, I'm just going to go through some simple tips to find the right firms. There's many scams out there, and also how to present yourself and what sort of track record that you will need to interest a prop trading firm. Now, I've written up all these points on a storyboard, so we'll go and discuss them in more detail. All right, let's look at how to become a prop trader and get a reasonable amount of money. Okay, you can make a really great income out of your trading, or maybe even a full-time income. Now, in terms of first point, do not pay for training from proprietary trading firm. Okay, what you got to think of this: why would a firm teach you to trade? Why would they bother? Okay, we know the success rate in Forex trading is pretty low, and the success rate in people who can manage money and balance the growth rate with what I would call reasonable drawdown, that's a small percentage of people who can do it. Okay, I know plenty of people who can trade and make money, but their drawdowns are too big. You've got to manage drawdown if you're going to trade other people's money. I'll come back to that in a moment. Most of the proprietary trading firms that I see teaching people to trade, it's a no-brainer for them because they just cash in on the training. I saw a typical example. You're going to get a $25,000 account, which is too small in my view. You pay $750 to them up front for their training and their evaluation, or whatever they call it. Then you pay them ongoing fees. But the capital risk you could take is only $500. That's less than you paid up front. You've got an unrealistic profit target. What I saw was like make 10% per month. That's your target. $500 risk on 25,000, and you're supposed to make 10% per month. You're not going to do it, are you? They can cancel you if you don't, or any time they don't like your trading style. So you just be cancelled any time. They pick up the fees. You've got to keep in mind prop firms tend to be unregulated. And 25,000 is not a lot of money. Most of these prop firms that I see online will give you a maximum of 50,000 to start. It's not enough. I'll come back to why in a moment. You want more. Okay. Now, in terms of don't pay for training, if you're confident in your trading, get a track record together. Okay, yourself. You can present the track record. If you meet the following criteria I'm going to give you, you'll get 100,000, million, maybe even more in time. Okay. Now, in terms of your track record, it must be on a reasonable capital base. When I evaluated traders, I'm not interested in someone coming to me who's made money on a few hundred or a couple of thousand. I want 10,000. I want money that matters. And you've got to keep in mind, it's much easier to make money on a small amount of money than it is on a large amount of money. And you want to be confident that if you're taking on a trader, or any proprietary trading firm is, that they can handle big money under pressure. So you want a track record, but you must have a reasonable capital base. 5,000-10,000, I think, be the minimum. Now, in terms of your gains and the years of trading that you should present, okay, I think, if you could compound 15 to 20% per annum, okay, and basically show a 2 to 3 year track record, that is going to get you money. Okay. Now, in terms of anything less than a year, no. Okay. Normally, if you're looking to evaluate traders, you want it to be a reasonable time period. I think 2 to 3 years is the minimum that most prop firms, who are serious prop firms, would look at. You might get away with 1 year you've done well. It's been a bad year for most traders, but 2 to 3 years trading. You then have to do the difficult bit, which is adhere to a rough 3-to-1 rule in terms of peak to valley. Okay, what I mean by that is you're making 15% per annum. Your gains should be roughly 3 times the amount of your drawdown. Okay, so what I mean by that is I would find it acceptable if a trader drew down, let's say, 5%, okay, and then got back to a new peak after that. Okay, if you're making 15%, you draw down 40, that's not acceptable. Okay, so you're looking for rough, or most proprietary traders will be looking for a rough 3-to-1 peak to valley. So your valley back to a new peak, basically. Don't draw down more than 5% as a general rule. Okay, you might get away with a little bit more. Obviously, it's not fixed in stone, that figure. Typical drawdown and worst drawdown, what's acceptable? Typical drawdown, I think any trader is going to draw down for 3 months at some point. Okay, worst drawdown, yeah, no more than 6 months. Now, a lot of traders might think this is easy criteria. It isn't. Okay, you look at how the top hedge funds perform, look at their track records. If you can do what I'm saying here, you're up with the best, you know, in terms of managing money in the right way. So yeah, 3-month typical drawdown, okay. Worst for 6 months, I'd accept that. Some trader came to me. Your fees, management and performance. Basically, you will get performance for sure. You might get management fees as well, 2% of capital managed. You know, 30%, 50% performance fee. You might have to split it with the company. Now, this is where you have to think about whether it's worth your while, okay, in terms of being a prop trader. You've got to find the best companies. In terms of finding the best companies, you just go to the regulator, look what the companies do, and you'll find the right companies, okay, who are dealing with their own money, or you could even actually go for people who are managing other people's money as well, and then write to them, okay? Yeah, present your track record, nice letter, short and to the point, stressing your performance to the right person. And if you've got a performance within the criteria I've just said, you'll get people come back to you and want to know more. Well, how much capital can you expect? Well, in terms of it's obviously going to vary, but you don't want anything less than 100k. Okay, that's the minimum. Because let's say you've got 100k, let's say you could make 20% on that, that's 20,000, and let's say you split it with the company, that's 10,000, isn't it? That's not a fortune, okay? You ideally want 1 million, don't you? Yeah, and you would get 1 million. You might get 100,000 maybe to start, and then the firm can just evaluate you that you're doing all the right things in relation to trading. Obviously, you've got your track record. Yeah, you might get 100,000. They'll step it up after that. I know people who've done this, and they got 100,000, and one guy got 200,000. They're both now trading in the millions. One, I think, has got 2 million. The other's got 5 million. Okay, performance, performance, performance. That's what it's about. But also keep in mind, you've got to balance that performance with drawdown as well. Yeah, trading money with low drawdown. A lot of traders can't do it. Yeah, but the last thing you want if you're managing money, or it's a family fund or whatever, is a big drawdown. Okay, you don't want it. Yeah, 15-20%. Any firm would be happy with that on a consistent basis. You're up there with the best. So if you want to become a prop trader, do it yourself. 2 to 3 years trading track record, adhere to the points I've made in this video, and you can make a really good second income and possibly even trade for a living. So that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.